Oh, just a minute, guys. All right. Can you hear me? Let me know if this is working okay and if I'm too loud or too quiet. That looks like we only got one viewer this morning. Wonder if you can use the chat room. If you're on mobile, I know it's hard. Let me know what your experience is with stocks, and I'll tailor it just for you. And let me know if I'm coming through loud and clear. Oh, we got one more viewer. Hey, let me know in the chat room if you can hear me okay. Let me know if I'm too loud or too quiet, and we'll get started here in a second. But let me know about the sound volume. Can you guys hear me okay? Thank you, Oscar. Good to know I'm loud and clear. I'm battling some allergies. That's what's causing me to have so much phlegm. All right. Oscar, you've been through this before. Who else is in the chat room? And tell me what your level is with options and the wheel. I want to know how much I need to stay on the course or how much I should tailor it and go off course today. Because I want to go out and start looking for some stocks with you guys. But if you haven't done the wheel before, then I do want to get through this as well. What is space doing in the pre-market? Down to $23 since last night. Richard Branson hit us with his sale. We dropped from 29, 26, 27. And thanks to Richard Branson, we've now dropped another $3 on space. I did send out an alert to my Discord group to sell, or that I'm selling all of my space stocks because of what Richard Branson did to us. Anyway, let's go over the, whoops, I didn't mean to click share. I want to click present. Stick with me, guys. All right. So, we teach the wheel strategy here. Why do we teach the wheel? I thought about it more today. I saw some funny posts today about people losing money trading GMC, AMC. They're getting involved in these pump and dumps. And it reminds me that people still haven't figured out what is called the inverse narrative. The inverse narrative. If you read books and you read articles, 90% of them, what do they teach you? They teach you buy on the dip, sell when it goes high, put in stop losses, and day trading. Day trading is somehow where it's at. Let me tell you something. 90% of day traders lose 90% of their money in the first 90 days. We call it the 90-90-90 rule, and it exists on purpose. It is intentional. They are teaching you intentionally how to lose money in stocks so that they can take advantage of you, okay? And the brokers earn more fees, and the people on the other side of the trade, the investment banks, they earn more commission because they take the other side of your trade. They know that you're doing bad trades, so they take the other side of it. It's called the 90-90 rule, and that's how they abuse you, and it is fully intentional, okay? So the first thing we have to do is not do that. One of the great ways to not do that is the wheel. Why is the wheel different? You're not day trading. You make one trade, you wait 30 days, then you exit early, or you let it expire. How many commissions does that generate? Only generates one. One per sale. Hi, Chester. Thank you for coming today. Okay. Now, I like Tastyworks, I like Tasty Trade, I like watching their program, it's very educational, but if you noticed, what do they do during live shows? What do they do during the show? They look at a stock and then they tell you what type of spread they're doing. They look at a stock and they say, I'm going to do an iron condor on this, I'm going to do an eagle on this, I'm going to do a butterfly on this, I'm going to do a short put on this, right? What are they doing? They're using 20 different tools so that when they find a stock, every single stock they're making a trade on it. They don't talk about a stock unless they're making a trade on it. And so what does that teach you? Oh, it teaches you if you want to be successful, you should be like them. You should put on 20 trades a day. Well, what happens if you put on 20 trades a day? You generate 20 commissions a day for them. Okay? They're teaching you how to make them money. They're teaching you how to make them money. So why do we use the wheel? The wheel has an incredible amount of downside protection. It's incredibly safe. It's safer than buy and hold. I'll teach you guys that in today's lesson. It also doesn't play into the way, you're not playing their game with their rules. You're playing a different game. They're teaching you, Chester, what do you need help with? Let me know, buddy. They're teaching you how to lose money. Well, if that's what they're teaching you, you need to play by a different set of rules. The wheel method is a different set of rules because you're only putting on 5 to 10 trades a month and then you're letting them expire. Okay? You're saving commissions. They don't like that. Okay, why do we use the wheel? The stocks may change, but the strategy repeats every month. We use the same strategy on different stocks. And so what we do is we're not looking at 20 different stocks and trying to use 20 different tools and fit the right tool to the right stock. We're going to look at hundreds of stocks, and we're going to use, every single time it's right to use the wheel, we're going to use the wheel. In other words, we're focusing on one tool, and we're maximizing our time spent analyzing the company so that we only use good companies. Quick refresher if you're new. What are options? An option is a two-sided contract between the buyer and the seller. It's not between the buyer and the broker, between buyers and sellers. That's what we mean, two-sided contract. Allows the buyer to trade 100 units of stock and agreed upon price by a certain date. Okay? We'll give an example in a second. But the buyer has to pay a premium. The seller receives the premium. So in the wheel, you are the seller. You are the receiving the premium. For example, if the buyer wants to use space stock, that's Virgin Galactic, used to be $30. Thanks to Richard Branson, it's now $30. Okay? If you're going to do the May 7th call a couple weeks ago, it would have cost you $3.50. So the buyer would pay $3.50, and the seller would receive $3.50 times 100 shares because every option contract is 100 shares. So buyer pays $3.50, seller, us, receives $3.50. This is the first step of the wheel. We sell options, not buy them. Okay? When you're buying an option, you are paying money to create leverage. You are taking on high risk because time is against you. When you sell options, you are collecting premium up front, which lowers your cost basis, which lowers your risk, and you have lower risk because time is on your side. This is why we sell, not buy. The wheel strategy is not a spread, it is a two-step strategy. You sell a cash-covered put. If you get assigned, you sell a stock-covered call. If you don't get assigned, you sell a cash-covered put again. It can be on the same stock, it can be on a different stock. But you keep selling cash-covered puts until you buy stock. Because of the cash-covered put, it gets assigned to you. Then you use those stocks to sell covered calls because you need something to cover the call. You need stock. Well, where'd you get the stock? You just got it off a cash-covered put. Why did you do it on a cash-covered put? Because you collected premium month after month, lowering your cost basis, making money until it happened. That's the goal, okay? This is what it looks like if you like flow charts. You start in the top left. You're writing. Writing means selling. Selling means shorting. It's all the same. You're writing a cash-covered put. Then you wait. Did it get assigned to you? No. It expired? Great. You got your collect your profit, and you do it again. Sell a cash-covered put. Didn't get assigned? Great. Collect your profit, do it again. Super easy. 90% of the time, okay, up here, 90% of the time, this is what you do. 1, 2, 3. 1, 2, 3. Sell, not assigned. Take the money. Sell, not assigned. Take the money. 90% of the time, if you use my strategy, that's what I've been getting, okay? 90% of the time, never gets assigned to me. 10% of the time, what happens? Gets assigned to you. Now what do? You write a stock covered call. You use the stock to sell a covered call. Does it get exercised? Does it get taken away from you? No. Collect your premium. Sell the stock covered call again. Exercise? No. Sell the stock covered call again. See what I'm saying? It just repeats itself. Then finally it gets exercised. You should make a bunch of money with this. Then what happens? Well, you got a bunch of money. What do you do with money? Use it to write cash-covered puts. See, this is why the wheel. Chester says he does not see the video. Does anyone else have this problem? Hey, Chester, are you on a phone? If you're on a phone, you need to maximize it. Let me check my other settings here, because it would be really bad if nobody else can see it. My settings look okay. Please let me know, everyone else, if you can see the video just fine, if it's a Chester issue or if it's a Buddy issue. Wayne says you see it. Thank you, Wayne. Chester, I don't know what's going on, brother. Try F5 if you're on a browser. If you're on your phone, close it, restart it, and try again. Everyone else can see it, Chester. I don't know how to help you guys. Somebody else has any advice for Chester, let them know in the chat room. I got to keep moving, Mr. Chester. I wish I could help you, but I have no idea what's causing your problem. All right, let's keep going. But I hope you guys understand what I'm saying if you get this. 90% of the time, you're only in half the wheel. Sell a put, doesn't get assigned, take the profit. Doesn't sell the put, doesn't get assigned, take the profit. 10% of the time, you end up on the other side of the wheel. Boom, 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 boom. Okay? Let's keep going. I want to use Virgin Galactic as an example. Even though Mr. Richard Branson sold us out, we'll still use his example today. We'll change it next time. Okay? This is what it looked like 2 weeks ago. Virgin Galactic was $30 a share. This is all their basic information. Blah, blah, blah. If you're doing normal stocks, you care about this. You can see here, they're at a good trading range before. Okay? That's why we could have done this. We didn't do this, but we could have done this. This is what an option chain looks like. Chain has several parts to it. It has an expiration date. This option is expiring May 7th. You have the call side and you have the put side. Over here are the calls. Over here are the puts. You have the last price, the bid price, the ask price. If you're on Yahoo Finance, which is what we use for our example here, if you're on Yahoo Finance, you're going to see it shows last price, not bid price. That's why it's going to look different when you go into Tastyworks here in a second. Okay? But notice, we were at $30 a share back then. Here, you'll see the color lines. You see that this is bluish, and this is white. That color line is showing you where the in the money is. We call this in the money. In the money is the 30.50 and the 31. These are both in the money. Okay? Outside here, the further you get away, it's called out of the money. If you're 29.50, you're near the money. So you hear those OTM, ATM, NTM, near the money, out of the money, out of the money, at the money. Excuse me. Okay? What we want to do when we're selling calls is we're selling out of the money. We want to be as far away as possible, but still collect a good premium for our risk. Okay? You don't want to be too far. See, if you're down here, $20 for 22 cents, you're only going to make 1%. I think that's too far for my strategy. Okay? I'm 38 years old. I've got a pretty good amount of money. I don't need to retire anytime soon. I don't need to live on my income from trading. So I don't want to make 1% a month. I want to be up here. I want to be getting $1.65 for the 27, not 22 cents for the 20. Although, if we'd done this trade, thanks to Richard Branson, we'd now be getting some shares at 27, because now we're at 23. So now, in this case, you actually would have been better off with the 0.22. All right, let's keep moving. But, despite what Richard Branson does to people, I want to compare this. And let me know if I'm being funny, guys, or if I should drop the Richard Branson jokes. Let me know in the chat room. All right, but I want to compare this to a buy and hold, because I want to show you that this is safer than buy and hold. I want to show you with numbers. Okay? Let's pretend we bought 100 shares. Actually, this is going to be a great episode. Let's pretend we bought 100 shares of Space Virgin Galactic at the beginning of the month. Well, if it went up to 33, you would have made $300. Obviously, that didn't happen. We're at $23, so you would have lost $650 if you had bought Richard Branson stocks 2 weeks ago when he was selling. What would have happened if we would have sold the put? Okay, what would have happened? We want to compare buy and hold versus selling the cash covered put versus the wheel. We said we were going to look at the 26. The bid price was actually $1.30. Okay, we would have a break even to $24.70. I know you don't understand what this means yet. If you're new, you're going to understand in a few videos. Okay, it takes a while. You won't get it right away. Just stick with it. Okay. Well, let's go through this. If it went up 10%, You'd collect $130, but Mr. Buy and Hold would have made $300. Obviously, that didn't happen thanks to Mr. Richard Branson. If it went sideways, Buy and Hold guy would have made nothing, would have risked all that money to make nothing. That's not very good. You, meanwhile, would still collect $130. The option expires because it's not below 26. At 27, still not at 26, you still collect $130, but Mr. Buy and Hold would have lost $300. Okay? Here's where it gets interesting, is at $25.50, you are below the $26 put, but this is what new people don't understand. This is what new people don't understand, so pay attention. At $25.50, you're below the strike. You will probably get assigned the shares, but if you turn around and sell them at $25.50, you're still 80 cents, which is $80, above your break even. So you still collect $80. You still make money. This is what people don't understand when they're new to options. When you sell the put, your break even is not the strike. It's the strike combined with the premium. You have to combine the two. Okay, so our break even is $24.70. At $25.50, Mr. Buy and Hold loses $450. Guys selling the put, us smart guys, we're still going to make $80. Still going to make $80. Now, option E, scenario E, Richard Branson sells $150 million worth of shares to do some other ecological company, so-called. Okay? Mr. Buy and Hold, 2 weeks ago, just lost $600 thanks to Richard Branson. What did we lose? Well, at 23, we're going to lose a little bit more, but at 24, you'd only lose $70. Now, do you guys follow the math? Does everyone follow the math? Let me know if you understand the math here, because our break-even is $24.70. We sold the put at 26. We collected $1.30 in premium, which means our real share cost is $24.70. So if it goes to 24, we only lose $70. What happens to everybody if it goes down to $22.50 after the Richard Branson sell-off? Okay, Mr. Buy and Hold is going to lose $750 for every 100 shares, and we would lose $220 if we didn't close it early. Okay? So, yes, things can go bad. There's no such thing as a perfect strategy. You can possibly lose money on the wheel, but it's a lot harder to lose money than it is with day trading. Day traders, again, lose 90% of their capital in the first 90 days. 90% of them. Anyway, how do we do this? Let's calculate it. I want to show you guys with my handy-dandy calculator how incredibly easy this is. Okay? Let's go back a slide. I should do this on the other slide. I think it might be easier for you guys. Okay? We're selling $26 put. We're collecting $1.30 in premium. So the first thing you do on your handy-dandy calculator is you put in $1.30, and the next thing you do is you divide it by the strike. Not the stock price, by the strike. And you'll get a multi-digit number, multi-decimal number. This is the percentage. If we take $1.30 and sell it to $26 put, we are going to make 5% on our money in a month. That's not a year. That's not 5% APR. That's 5% a month. 5% a month because we're doing the May 7th. This obviously was April 7th when I did this slide. Okay? So what does that work out to in APR? Well, the APR is slightly different. Okay? Once you know your ROI, it's easy. You take 365 and you divide it by the contract length. We did a 30-day contract. So you take 365, divide it by 30, you get 12 segments. You take 12 segments, you times it by 0.05, what do you get? You get your APR, almost 61% return. 61% return. Is there any bank that you are putting your money into in a savings account or even a money market account where you're getting a 61% return? Tell me, I want to know. Doesn't exist. Not with US dollars anyway. You'd have to be in a funny money currency. You'd have to be in Zimbabwe currency. Okay? What happens if you do this month after month after month after month? Well, you get Einstein's favorite wonder of the world. You get compound interest, you compound growth. Okay? 5% after 12 months does not equal 60%. Not if you compound it monthly. If you compound it monthly, it equals 80%. And yes, folks, this is repeatable, reliable information. Will you always get 5%? No. Will you always get somewhere between 1 and 5%? If you do it right. If you do it right, you will. Okay? Now, what happens when there's a big market crash event? Yeah, we all get hurt. We all get hurt. But you get hurt less than the buy and hold. I've already shown you that. I've already shown you how much less damage you take versus the buy and hold guy. All right, let's jump into another example. This time we're going to use Tastyworks itself. I'm going to show you how you do it. So, back then, April 7th, if we had sold, April 6th, if we had sold the May 7th, what would you do? First, you're going to end up with a screen like this. You type space, top left. Then you come down here and you click on the 31 days, May 7th. Okay? Then you come to find your strike price. We were doing the 26th. Here you can see the bid is $1.99. The ask is $1.51, and the last was $1.34. Okay, I'll show you how to do it in a second. Once you click on that bid, you're going to get a line like this. Red one, red S. Red S means you're selling. Then you come down here where it says limit price, and you type in the price that you want to get filled at, $1.34, for example. Okay. You can also use the slider back and forth. Down here it says -1. Also want you to pay attention to this. Down here bottom left, it says pop 75%. 75%. That is the probability of profit that you as the seller will not have to take assignment at the end of 31 days. Okay? This is a very important number. The other number you can use is delta. I don't use delta as much as other traders because I just use the pop. Pop is more accurate. Delta is less accurate. Delta is an approximation. Well, they're both approximations, but pop is a little bit more accurate, okay? Other people talk about the deltas, I talk about my pop. I'm looking for above 70, 80% pop. Depends how risky I want to be. Here you're going to see max profit, 134. Why is it 134? Because that's our limit price. We're selling one contract for $1.34 times 100 shares. Our max profit will be $134 for the contract, okay? What does max loss really mean? It means our break-even price. If we sell at the 26 for $1.34, our break-even is $24.66, $24.66. That's how low the shares need to go before we start losing money. Before we start losing money, okay? This is what it looks like if you go to the curve. Now, it's actually better if you click this analysis button. I'll make sure to change that slide out later. But here's it is. Everything above 26 is pure gravy, pure money. Between 24.66 and 26 is reduced profit. You're still profiting. You're still making money, but it's reduced profit. And anything below 24.66 is where you start to lose. Start to lose money. You don't lose money from the 30. You lose it from the 24.66. Very important to understand this. This is the key to why this is so much better than buy and hold. I'm telling you guys, this is money-making shit. This is money-making stuff. I'll try to keep it friendly for the kids. Sorry if you've got kids in the room. Okay? This is money-making stuff that other people will charge you thousands of dollars for to teach you. At a seminar, at a webinar, they will teach you this for thousands of dollars, and I'm showing it to you here free. And if you enjoy this and if you benefit from this, make sure you tip. I appreciate it, and that's what keeps the show alive. All right, if you click Send Order, you're going to get something that says Review. You get Review Order. Send in Review is what you'll click. Then you'll get something like this. It's just going all the information. You choose which account you want to put it in. It shows -1. That means you're selling. That's a good thing. We want to sell. Estimated trade cost. Pay attention. CR means credit. DB means debit. We are selling for a credit. If you see a debit, you have something very, very wrong. We do not do that on the wheel. We never buy options. Buying options is expensive and risky. Selling options is very profitable and safe. Remember that. Okay? Bingo, bango, bongo. You put in your order. It's working. What if you find out suddenly that Richard Branson sold 150 shares? It's not 9:30 yet. How do you cancel? You come over here. You come out of the trade tab. You click the activity tab. Then you go to the space shares and you right-click and you hit cancel order. You hit cancel order. Okay? Chester, I'm sorry it's not working. Come back and watch the replay. Feel free to listen in. Sorry we couldn't help you get it working today. All right. That's it. That is the quick and dirty, fast way of teaching the wheel. Now, you may say, Bud, you left out the call part. It's the same thing. When you get the stocks, you turn around and you sell the call. You want to get it at a break-even price or higher, ideally. If you can't get it to your break-even, you're trying to get the highest amount of premium without getting halfway there. If you can't get halfway there, either hold the shares or dump them and move on. Now, if you click the description down below, you'll get links to my Tastyworks referral link if you want to join Tastyworks. They are the platform that I like to use and that most people who trade options really love them. Okay? We also got our tip jar down there. We've got some PayPal buttons. We've got a Bitcoin address. You can send us tips, and we greatly appreciate it. And you stuck with me. It's almost 9 o'clock. I'm going to throw out some Discord invites in case you want one. We have a fantastic Discord group. We share our trades, some of us. Okay, I can't promise that everyone will. And we help each other. If you've got a question, if you don't understand, hey, how does this work? Is this right? Did I set this up properly? Okay? If you come to us in the chat room, usually someone will help you. Can't promise that someone's going to help you, but we've got quite a few great members in there. So I'm going to throw this out here. Yep. There you go. There's that invite link, and Mr. Wayne brings up a good point. Most significant part of this strategy is picking the right stocks. That is absolutely true, and it's the same with buy and hold. You buy the wrong stock, it's going to hurt you. Same thing. If you sell the put on the wrong stock, it can hurt you. Can hurt you. You're still better off with this than buy and hold, even if you pick a wrong stock. But unlike day traders, we don't just look at chart patterns and then throw it on the board and then try and scalp it. You might actually have to hold these shares, so it's important that you know about the shares and that you pick the right ones. How do you pick the right ones? Great websites, finance.yahoo.com and wallmine.com. Wallmine.com has a lot of the same information that Yahoo does, but it's all on the front screen. It's much more graphical. It's much easier to read. It's very beautiful. Okay? So I recommend it. So I'm just taking a look at space stock right now, because that was our example. We saw that they lost $73 million in the quarter ending in December. We haven't seen their earnings this quarter. We know Richard Branson is selling out. Should be illegal. Right? He knows something that we don't know. Earnings are going to be bad. I'm looking at them. If they were on the same trajectory, the same run rate, they'd go broke in 10 quarters. 10 quarters is a lot, so they're still going to survive, probably. But I do wonder what we're going to see in the next earnings report, especially because Richard Branson is selling before earnings, which only come out on May 4th. Anyway, very interesting stuff. It is almost 9 o'clock. We finished up with the wheel strategy. If you had any questions, just type in the chat. I will answer them. If any part of the wheel was confusing, we didn't cover everything in super great depth, but you know what? It takes time. It takes a bit of practice, and it takes a bit of studying. You just keep learning about it, and eventually something just clicks. And a month later for me, I started studying the wheel for a month before I touched it. And I was reading, and I was watching videos like this, and then after a month, something just clicked in my head, and suddenly I understood how it worked, and why it was so powerful, and I started testing it, and it's been an amazing ride. I've grown a $25,000 wheel trading account to $43,000 in less than a year. That's actually more than 70% return. Okay? You can make serious money with this. With that said, let's go look for some serious stocks to make money with this. So I've got my own scanner. It's not public yet. I might make this public. But you can come in here. Oscar asked a very good question. Do you do the wheel on dividend stocks? I can. The problem with most dividend stocks that I find is that their implied volatility is lower, and so you don't earn enough premium. However, you might be thinking, could you buy the stock dividend and then sell the covered call? Absolutely. In fact, if I was a dividend stock picker, if that was my main strategy, that is exactly what I would do. I would find good companies with good dividends. O comes to mind. I'll type that in the chat room so that you guys have it. O is a REIT that pays good dividends. Okay. When I looked into them a year ago, it was a good company. I haven't looked into it now, so I can't promise that it's still a good company. Okay. The screen's a little bright for me. O was a good one. Okay. CCL, when they were operational, had good dividends. Okay. When they were operational. Right now, because of COVID, they're not operational, so they cut their dividends. It's another problem you're having this year with dividend stocks is a lot of them cut it after the start of COVID. So if I was doing dividend stock strategy, what I would do is I would buy the stocks, and then I would do dividends. I would do the covered call, and I would do it very low. I'd only try and aim it for 1 or 2%. I'd aim for 1 or 2% on the covered call, because I don't want the stock to get covered or taken away. And also, it's going to be very hard, in my opinion, it's very hard to find 4 or 5% a month on dividend stocks, because they tend to be a lot more balanced, I guess. People really do the math on dividend stocks, and they're really fundamental traders. It's not like these crazy growth stocks. Wayne Bicknell has some good picks for you for dividend stocks: Apple, ABBV, PRU, and Triple M. Triple M is 3M, which is the company that makes all the tapes and industrial stuff and glues and all that good stuff. All right, so I'm looking through my stock picker today, stock scanner. I'm seeing a lot of the same companies as before. CleanSpark is now a Bitcoin company. They used to be a hardware company for electronics. They still do that, but they mostly focus on Bitcoin or the value of Bitcoin. Same thing with Riot and Mara. Riot, you can earn 7.5%. Mara, you can earn 6.9%. That's some pretty good put values here. I'm going to open those up. I wasn't going to touch wasn't going to touch any more Bitcoin stocks for a while, because I have a secret stock that I'm hoping goes 4x. I've shared it with a few people, okay, especially if they donate. Just hint, hint, work, hint, hint, all right? And I've owned $30,000 of that stock, so I haven't really been doing the wheel on Riot and Mara. But one thing I've noticed recently is that Riot and Mara, let's open them up in Walmart. Let's open up Riot. Let's go to CoinMarketCap. I want to look at the chart for that. Do Walmart again, Walmart again. I'm going to show you guys something. We'll see how true it still is. So Bitcoin, over the last 7 days, is up 4%. And here you can see the chart for Bitcoin. Okay, let's open that up so you guys can see it a little bit more. Here we see Riot. It went up. That's a month ago. Let's try and get down, zoom in a little bit. They're not trending up. They're trending sideways and a little bit down. You guys see this? So this is a Bitcoin mining company. That's all this company really does. They do a few other things in crypto, but that's what they do. You expect them to have the same chart pattern as Bitcoin. You'd expect correlation. But instead what we're seeing is we're seeing some divergence. Let me get that up there. See? Come on. Do it properly. That's wrong. Excuse me. There we go. Can you guys see that? Here we're seeing a slight trend upwards on Bitcoin over the last month. Here we're seeing Riot is trending a little bit down. So we're seeing divergence where we shouldn't see divergence. We should see correlation, which might mean that we're going to have a break up. We're going to see Riot jump up in value, unless, of course, Bitcoin drops, and then suddenly we'll get correlation again, I'm sure. So this is what's risky about this trade, is if you're making this trade, you need to be bullish on Bitcoin. But I'm kind of more bullish on Riot because this divergence shouldn't exist. I think that it should inverse itself, and that we should see them come back to correlation. So in other words, we should see Riot going up. We should see Riot going up. We shouldn't see Riot going down. Oh, look at this. This is actually a nice one. All right, so Riot's trading at 48. We can reach down and sell the $35 put, give us a cost basis of $32.38, a 73% probability of profit, and we're going to make 7.49% in 35 days. That is a really, really safe number. That is a really safe number. That is a cost basis distance of almost 33%. That is unheard of. And like I said, if Bitcoin goes up or even sideways, Riot should be going up in value, not down in value. So you know what? I'm going to probably put this trade on. CleanSpark, similar company, Bitcoin mining plus hardware. They make their own hardware for green companies, for solar and all that, batteries and stuff. You can get almost 7% ROI in 35 days. You can do the 21 and the 1750. You're getting a lower cost basis distance, only 22%, 71 pop. This is good, but the Riot one is better, so we're going to look at Riot. And now I want to look at Mara. Let me know what you guys would pay for an option scanner like this. We're still in the beta, so we've never made this available for anyone else. But it sure does make finding these things a lot easier and a lot more convenient. I'm just wondering if people will pay for it, or if they want it, if they only want it if it's free. Because you can go in, you can put in all your own settings, you can change the cost basis distance. I know there's a few other things that do similar things. Wondering how much people will pay for this. So, 35 days, we can get a 6.5 or 7.3% return on Mara. We get very similar on the cost basis distance and the pop. We're getting very, very similar to Riot. And then the 42, so on the $30 put, cost basis of 28.03. That is pretty good. CleanSpark, I'm going to drop you. What do we say? We have a cost basis of 32. This is trading at 48. Cost basis of 28, trading at 42. That is very, very similar. Excuse me while I open up my Tastyworks. So I'm going to consider putting on these trades today. In fact, you'll probably see me put them on. We'll have to see what Riot and Mara are doing in the pre-market. Only downside that I found to Tastyworks is they don't show the live action pre-market, and you can't really do pre-market trading on them for stocks. I find that really annoying. All right, pre-market, Riot is down even more. This is crazy. Why is Riot going down while Bitcoin is trending up? Mara. Let me know what trades you guys are doing today. I want to take a look at them. I'll give you feedback on them. And then I might also do it myself. Oscar asks, why enter the trade before the market opens? First in, first out. First in, first out. If you put in your trade earlier, somebody has the same price as you. Whoever put it in first should get filled first. So what I like to do is I want to put in my trade as early as possible, sometimes days or a couple days in advance over the weekend. And then if I don't like the trade, if the numbers change in the pre-market, I cancel the trade. I make a new trade. But I want to take advantage of that first in, first out. Great question, Oscar. Mara is also going down. All right, so I'm not going to do. I'm going to make these trades today, I think. Let me check the news. Can anyone tell me? Does anyone know why Mara, and Riot are going down while Bitcoin is going up? I need to know, and if you have any ideas why, I would want to hear them. See, I'm not one of these people that comes on here and pretends to know it all. You get all these fake TikTok 19-year-olds talking about trading stocks. They've only been out of diapers for a few years. Yeah, it's an old man joke. Right? Why would you listen to a 19-year-old on TikTok telling you how to trade stocks? Be careful, guys. But I'll tell you why people do it. Because of the ego and the fake confidence. The bravado. It's not real confidence, it's bravado. That's why people do that crap. But I'm not going to fake you guys like that. I'm going to tell you, I have no idea why Riot and Mara are trending down while Bitcoin is trending up. It doesn't make sense. Marcus opened up a position. Penn, May 21st, $90 2 days ago. Congratulations, Marcus. I hope that's going good for you. You want me to take a look at it? I'll take a look at it just for funsies. But I hope it's treating you right. See, look at this. Look at this. We had a dip. March 26th, 25th, and then we're nothing but trending up on Bitcoin. If I come to March 25th, we're at that level or lower. We're not getting a trend up on Riot. March 25th. March 25th, we had the same date. See, we're correlated here with Bitcoin. And then it goes up, and then it's coming back down. So maybe it's because Mara looks like it outpaced Bitcoin for a bit, and then maybe it's coming back to correct itself. And we see the same thing with Riot. Riot, here we see correlation March 25th, then we write it up, and then we're writing it down. So this seems like maybe, what is this, April 13th? Maybe the last week, April 12th and 13th, these stocks shot up too high. They got pumped somewhere, 12th and 13th, and maybe they're correcting back down. Maybe they're correcting down to then re-correlate to Bitcoin. So if Bitcoin comes back up again, oh, we're down on Bitcoin a bit. We're down to 61. We were at 64 yesterday, 2 days ago. 64 2 days ago. Oh, okay. So maybe we had a bit of a price correction, not like we decorrelated. It looks like the thesis that I'm having is that Mara and Riot outpaced Bitcoin a little bit. Then they came down to correlate to it, and now they're back to correlating it again. Okay, so that's something to think about. But you know what? We're earning so much premium and have so much cost basis distance on these that I'm not going to be worried about it. I'm going to open up these positions. I just might not open up a lot of them. Alright, so let's go take a look at these. Riot. We said, we meaning me, the most important person in my life. We're going to do the May 21st at the $35 put. They should have an earnings play coming up, yep. So we'll go through earnings if we do this. But we are getting so much cost basis distance that I'm not too worried about this. I'm considering it. I'm breaking one rule, but I'm breaking it because we're getting 10% more cost basis distance than I'm used to. I'm mulling it over in my head to make sure I like the idea still. Yeah, because even if you lower your percentage, I'm looking at the other percentages. Even if we lower our percentage 1.5, and then again 1.5, we're only increasing our cost basis by 1.5, so it doesn't make sense. You're better off. In other words, it's a wash. So you're better off take the premium than getting this slightly better. Oh, but those are different dates. That's why. This one's a longer date. 21 days, we can get 4%. That'll end on May 7th. Earnings is May 10th. That might be a good play. That's a safer play. Let's take a look at this one. I'd be getting a 4% ROI in 21 days, 71% APR. That fits my normal mold. I'm still getting really good cost basis and cost basis distance. I'm locking in a little bit less premium, but I'm coming through before earnings. So I'm going to do this one. May 7th. May 7th, $35 put. Where are we? May 7th, $35 put. We've got a little bit of a gap. You know what? I can't do this one because the price is already dropping. I got to wait for the price to refix itself, and then I got to put in the bid at the new price. So we can't do this yet. Okay, but we're going to write this one down. We're going to save this one and do it. Okay, let's go back to our scanner. Let's look for something that's not Bitcoin. Workhorse. Oh, we've got a cost basis of $9.30 if we do the $10 put. That'll get us 7% in 35 days. I think they had an earnings date coming out. Oh, sit down here. Let's take a look at Workhorse. I don't think I'm going to do it. I'm not that bullish on the company short term. Earnings are May 5th. Yep. Let's take a pass. Sol for solar. I already own Tesla. I don't need more solar exposure. Space, that's on a downtrend. By the way, if space gets back to the teens, I'm going to look at doing the wheel again on space, because I actually do want space shares long term. But I want to see an uptrend, and I want to see their earnings before I touch space again, now that Richard Branson is out of the picture. AMC is a meme stock. It's pump and dump. It's nothing but hot potato. If you touch that, you're not a real trader, unless you're day trading. If you're day trading, that's actually the stock to maybe day trade. But if you're doing wheels and other safer plays, AMC is crazy. Tired of seeing people saying they sold puts on AMC and lost money. Of course you lost money. You're playing a stupid game with stupid people. You're going to win stupid prizes. Microvision engages in development of laser beam scanning technology. This is one of those LiDAR companies when everyone thought LiDAR was going to go on cars. I never touched that company. Blue Apron. Blue Apron is such a weird stock. I did this a bunch last year. Blue Apron showed up month after month with good premiums. And so I traded Blue Apron a lot, even though I don't believe in their company. I believe in the sector, and they got a big boost. You'll see from COVID. Oh, you won't see it so much. There's the March 2020 boost. It went from $3. Oh yeah, you can see it. $3 to $12. It just doesn't look so big on the 5-year chart. And the 1 year is just outside of range now. But they got a big boost in March 2020. Everyone's staying home to order meals they can cook. But the reason I don't like this company is I read the reviews, and people didn't like their packaging, people didn't like the quantity of the food. There's a bunch of things people didn't like about this company in terms of, especially in comparison to other companies in the sector. Let's look at this. Oh, they had a big pop again in January. Why January? That is a huge pop. January 25th. They went from $5 a share to $7 to $9 to $12 a share, and then they came back down again. Anyway, revenues quarter over quarter is 22%. That's a good thing. Institutional ownership is 31%. That's a good thing. Earnings come out April 29th. That's bad, so we don't want to touch them. I just want to review this one for old time's sake to see if anything's really changed. There's still growth. They're not taking any profits. They're still losing quarter over quarter. Look at this. Their debt, their liabilities to assets is garbage. 115 to 215. They're 70% levered. These guys need to fire this. These guys need to fire all their managers, their CFOs, their CEOs. They need to fire the whole board on top and start fresh, just like their food should be. Their food should be fresh, and their management should be fresh. I hope you guys get a good laugh out of that one on this company. But they should just start fresh and deliver fresh. And look at this. Their cash on hand, they've barely got 4 quarters, unless they have, and that's at last quarter's rate. If they lose more, because you can see they have other quarters and they lost 15 and they lost 20, they've really only got 2 quarters of safety in cash on hand, and they're already at 70% levered up. These guys should just throw in the towel and try to sell themselves to another company. So, this just goes to show you guys, just because you see a nice setup, a nice premium, a nice cost basis, doesn't mean you should go out and do the trade and add it to your wheel account. That is a crap company, and we do not want to touch it. Jumia is sort of like my lost diamond. This is like the diamond I picked up and looked at it and then threw it back on the ground because it was just a dirty rock. I could have bought this company so cheap last year, but I really just don't understand, the space. This is the Amazon of Africa, is what this company is. This is the Amazon of Africa, and just look at this crazy run-up from $4 to $65 at the peak. Now it's trending down, back to reality. And this has become a meme stock. People are trying to pump this stock. You can see here, in March, they were trying to pump this stock. But this was like the company that I looked at. I saw the premium. It sounded cool, but what do I know about, digital deliveries and physical deliveries and Amazon in Africa? I don't know anything about that. I know literally nothing about that. And they've only got 36% debt. They're still losing money quarter over quarter. They're losing a lot of money. But they can survive 2 years. before taking on any more debt. Anyway, this is one that I had looked at because it shows up in my scanner. I looked at all the good stocks. I looked at all the good setups. Let me know all good stocks. But I looked at all the good setups in my scanner. Wayne says Branson sold 5.6 million shares. This is only 10% of his position. I was looking for that, Wayne. I didn't look too deeply into it, but it's still just bad news for the stock market. So you know it's going to trend down for a while, and we don't know what the earnings are going to do. And I'm actually still long-term bullish on any company that attracts lots of great engineers. But you know he sold it multiple times, right? It was over the course of like 2 weeks he was selling shares. I just want to know that the information is accurate. I'd like to know where you got that from, not because I don't believe you, but just because I want to read more into it. The sale of 5.6 million shares constitutes about 2.5% of the company and was part of a plan Branson and the company created in March. Okay. He is left with a 24% stake in Virgin Galactic worth about $1.5 billion. Thank you, Wayne. That's actually really good news. That might change my opinion. Maybe we should be selling. Excuse me, folks. I'm going to let my dog in, otherwise she's going to start barking. Maybe we should consider doing the wheel on space. Wayne, are you going to do the wheel on space? I want to know. Come on in. Come on in, girls. Oh. Excuse me. Sorry for that pause. I got two beautiful dogs. One is still just 5 months old. If she doesn't get in, she'll start whining and banging and crying and barking. And I didn't want you guys to hear that. All right. Yeah, I know you're cute. I don't got any food for you. Okay, you can have a treat. You girls can have a treat. Hold on. There you go. Come on. There you go. Come on. Come on. All right, give my dogs a treat. All right, F-Cell, Fuel Energy Cell. I think this is another company that I won't touch because of Tesla. Wayne, I definitely want to know if you're thinking about or doing wheel on space. I am open to changing my mind on space. I already dumped my shares, but I dumped them at 24.5. Now they're at 23, so I'm glad I dumped them. I got in at 21, so I wanted to make sure I dumped them before I got to my break even. I had 1,600, by the way, I had 1,600 shares of space just in one account, and I think I had 400 in another account. So I had 2,000 shares in space because of the ARC ETF, and I figured once they actually did put Richard Branson into orbit, and with the ARC ETF, that space would blow up and could be an easy double, maybe triple. Wayne says he has a 521 space, $20 covered sale put, got it for 48 cents underwater now, yeah. $521, yep, so a bit more than a month, 37 days out. I don't know when you bought it, maybe it was 2 months out at the time. And it was the $20 covered short put. Sorry, cash secured put. Yeah, that's the thing. I think I want to wait a few more days on space. Maybe I'll recommend it for Monday, or maybe I'll do it Monday. I still believe in the company long term. I just think that news is going to rock everybody. And it does seem like he did get out at a good time. I mean, like you say, he still has a large share. I'll have to go read what you read. Where's the profile for this company? Excuse me, guys. I'm checking out FCEL. Fuel Cell Energy Inc. That is really small. Let's zoom in for you guys. Design, manufactures, installs, operates, and services stationary fuel cell power plants for distributed baseload power generation. On-site power, utility grid support, distributed hydrogen. So they're a hydrogen company. They're a hydrogen power company. And natural gas. Okay. They do a bunch of things. They generate clean electricity, usable heat, water, and hydrogen. It serves various markets, such as utilities, independent power producers, industrial and process applications, education and healthcare, data centers and communication, wastewater treatment, So they're all over that space. Look at this. Profiles are written by their companies, and somebody in their company wrote microgrids instead of microgrids. Wow, they're worldwide. Oh, let's go take a look at their website then. Chester also has a $24.50 cash covered put on space that he sold for $1.59 in credit, so he now has a break even of about $22.91. But I think you're going to go underwater on that one, Chester. I mean, probably already underwater. I think you're going to get assignment on that one. I just want to wait a little bit more. I think I want to wait until after earnings for space, or I mean, if you're going to play space for earnings, you might as well be buying and going long. I don't think earnings with the wheel is good. Anyway, let's take a look at this company, FCell. I'll quit flipping me through there before I read your stuff. Fuel cell carbon capture gas pipeline let down stations. Gas pipeline let down. Interesting. Hydrogen, hydrogen, hydrogen. I gotta look and see if I open up Hillian. If I open up Hillian, yeah. No reason for me to do FCell if I'm also in Hillian. That's just double exposure into the hydrogen energy trucking market, right? So I took a niche and a niche. I took hydrogen motors out of the hydrogen sector, both in the clean energy space, clean energy sector. So I might as well let this Hillian play out instead of touching fuelcellenergy.com, unless I wanted to hedge against myself. Anyway, I'm going to close that out. We're going to look at the chart on Workhorse. We are 9:28. We got 2 more minutes till the bell opens. If you guys have any trade ideas, anything you want me to review, shoot them out to me. I'm here for you guys. I'm going to watch when the market opens and see if we can get a good number on these Riot shares that I want to do a covered put on. Workhorse is still trending down. You know, this is the company, for those that don't know the history on this company, this is a company that had normal valuations, and then they got into the runnings for that big government contract to replace all the postal carrier trucks that are going out of service, that are 10 years overdue for replacement. And then this became a bit of a meme stock. Reddit, TikTok, and all the YouTubers were talking about how this company is going to get it, because this was the only company that was whose proposal was 100% electric vehicles. Everybody else was doing hybrids. Some were even just doing regular gas. This is the only play that was pure electric. So, you know, the young generation, the 19-year-old TikTokers thought for sure this company would get it. Then, of course, the, 50, 60-year-old politicians came in, and they gave it to Oshkosh, which is, I think, part of Ford, I think is what they're a part of. And they're going to do gas trucks for like the first 5 years, 6 years, and then they're going to do hybrids, and then maybe later they're going to do electric. So, just goes to show you what happens to you when you listen to the 19-year-old TikTokers. But this is why this stock is so high. So this stock should probably keep trending down. And this is actually still a good company, even without that contract, because they have patents for launching drones from moving vehicles. So if you want to launch a drone from a moving vehicle, that sounds like a stupid patent. We shouldn't have patents for something so generic. But if you want to launch a drone from a moving vehicle, you got to talk to Workhorse for their patent. So this is still a good company. I'm just not sure it's at a good price. Finding the wheel on Overstock and Ride. Can you please review them? I will. I'm going to tell you, I think Overstock is overvalued for COVID. I mean, that's just my basic thesis, because I watch this write up a lot. I did a covered call play. I didn't do the wheel on Overstock last year. I did a pure covered call play down here and watched it go all the way up here and wish I didn't do a covered call. I made money on the covered call, but I wish I had just done a regular call. So they're back to 70. And 70, this whole range in 70 and plus, this is all COVID. So when you're making this play, this is almost like saying you're betting on COVID to stay up. Quarter-over-quarter revenue is 84%. Not all that, I don't know how much of that is real new growth versus just COVID online ordering growth. You'll have to decide your own thesis on what you think about the COVID. Institutional ownership is super high, though. That's 67% institutional ownership, which is good and bad. That means they've done a ton of research on it and they like the company. The bad news is once they start missing quarters, start missing earnings, those institutions are going to dump like crazy, or if the interest rates go up. For a PE, forward PE is 60. That's about double what you'd hope to pay. They are a profitable company. They've been profitable most of 2020. They were negative until 2020. See, that's the COVID play, though. All right, and I bet if you go to 2020, even their first quarter in 2020, they were negative. They've only turned positive because of COVID. So, Oscar, are you getting that? Your play with this company is really needs to tie into your thesis with COVID. If you think COVID is going to continue to be a big deal, and so people won't go outside and they won't shop from home as much, then Overstock is a great play. If you think that we're going to return to the old normal and people are going to actually leave their homes and go shopping, then Overstock might stay up, but they're not. I don't think they're going to be as high as they were before. All right, they're also at 40% debt ratio. That's not bad, especially if they're reinvesting the money properly. I think Overstock also had, I think they were an early adopter of like accepting Bitcoin and stuff like that, and they might have been doing development in the cryptocurrency space. So if you're going to do this play, you want to go research that, and I think that's what this company did. They were kind of an early adopter of cryptocurrencies. I think they're just looking for anything to make money, honestly. But if cryptocurrencies are going to be big, so if these guys have got good patents, good tech, or good cryptocurrencies coming out, it could be a good play for that. But definitely consider your COVID thesis, because I think that's what's driving a lot of the value for the stock. The other one he wanted to look at was Ride. Oh, Lordstown Motors? Yeah, I'm sorry. I'm going to be super biased against this because I'm such a big Tesla fan. I've watched over 200 hours of Tesla, and when I watch any of these other EV companies, I just lose my mind because they're so, in my opinion, overvalued and under-delivering, and they're going to have super hard time scaling. Where is the company? Okay, this site used to give a good company profile and a link to the website. Now they don't do it anymore. So I want to go to their website. NIO, has good volatility. It's a bit of a meme stock, so I don't like touching it so much. It competes with Tesla. I already have enough exposure in that sector. But if I was doing electric vehicles, and I for some reason wasn't doing Tesla, like Tesla's expensive, so it's really hard to do the wheel on Tesla. I do it in my IRA though, by the way. But, okay, well their website doesn't work. Their website's slow as, anyway, I was going to say a bad word, but their website's slow. That's not a good sign. Did it finally load? Take a look at the chart. You know what, though? I'll tell you what, Oscar. As far as charts are concerned, this is a good price point to be at for the chart. You are in a downtrend, so you might want to wait for a reversal. But certainly a lot better to do it this month than to do it in January and October. You would have got hurt in January and October. When are their earnings coming out? Doesn't tell us. see what the news is. I don't see any useful news. Just want to get a good look at their vehicles. It's a nice classic looking truck. It looks like a Ford, looks like a Chevy. Back end looks like a Dodge. Not crazy like the Cybertruck. You know when the truck's coming out, Oscar? I mean, it's a good looking truck. And I do care about products. When I'm investing in companies, good products are what make good companies long term. I filter out class action when I'm searching through news. Can I do that? I don't care about all these class action lawsuits. Alright, I'm not going to read too much on the news. I'm just going to take a look at the stock. Alright, let's take a look at this. I mean, they're definitely dipping down. They're lower than their IPO price, is what it looks like. Institutional ownership is really low. That's not a good sign. Insider ownership is high. That is a good sign because they'll bend over backwards to make money unless they're going to dump and run. PE is, well, they're negative companies, so the PE doesn't matter. Market cap 1.6 billion. It's not showing me insider trading. Where are they based out of? Let's take a look at their earnings quarterly. They're good at spending money, spending $40 million a month. $40 million a quarter. I always do that with this chart. I always think month when I mean quarter. I don't want that. I want my calculator. Debt looks amazing. 4% debt. They should take on more debt and speed up. That's what they should do. They've got too much cash on hand. Property and plant, 100. Intangibles, 11. I'm glad they don't show too much value in a bunch of patents that may not matter. I mean, in terms of the financials, it looks good. In terms of the financials, right, looks good. Hope you're still there listening, Oscar. I hope this helps you. If you believe in the truck, you believe in the mission, you believe in the management. Let's go take a look at their setup. Their option setup, I mean. When's the last time they did earnings? Okay, it doesn't show me their earnings, and it doesn't show me the last time they did earnings. I mean, unless it was December. Let's go 30 days out. Closest we can get is 35. Well, 35 is going to be the monthly, so I want to look at the monthly first. We're at 970. We got $2.50 wide spreads on these, which sucks. So we're going to do the $10 and see what that's going to generate, just so we know at the money is going to be 16%, but that's actually above the money by 35 cents. So that's about 12. About 12% at the money. That's good numbers. Let's do 0.08 at the 5. That's not good numbers. So the only valuable one that you can do is the 750. Not a lot of options there. So you're going to get, you might squeeze out a couple more pennies, but you're going to basically get about 6% in 35 days. So that's good. Your cost basis is going to be $7.06. Currently trading at 961. Let's do the math on that. 706 divided by 961. You see how fast and automatic this gets, guys, when you get used to it? Your good cost basis distance, you're going to get a cost basis distance of 26.5%. So if you own the shares, you own it at 26.5% cheaper. POP is only 70. You can't, unfortunately, you can't sell a 7 or a 650 put on this because There's just not enough. There's not enough open interest to do that, so that they don't list it. They're still 250 wide on the strikes, which is a shame. And if we come to the 28, it's basically the same thing. No, 28. Okay, that's annoying that the weekly has more strikes than the monthly. All right, let's go take a look at the weekly. So the weekly, you got a crazy spread on the $7 though. Oh, yeah, you got no open interest on the weeklies. You can't really do anything with this. You're not going to get filled or you're not going to get out. 0.14 plus 0.36 divided by 2. We're going to get 25 divided by 7. You can get 3.5% at the 7 in 28 days. That's a bit low. Ah, 942. Anyway, Oscar, the only problem with this company really is the open interest and the strike widths. If I was doing this, I'd do the 7.5 at the 45. And I totally got so sidetracked looking at stuff. Oh man, the whole market's red for me. What's SPY doing? SPY's up a point, but all my sectors are down. Space is at 23.56. Riot is down $4.50. That hurts my shares. By the way, you guys are seeing this. You see a trade price of 70. That's because I went at the money. I wanted to own the shares of Riot in case it went up sky high, or collect 26% ROI in 1 month. So this is intentionally a crazy play. But I used 9. Here's the beautiful thing. I used 9 other sell puts at a 5% ROI to pay for this. So these shares are free for me. So even though it says $70 trade price, $70 times 0.26, I really had a cost basis of 51, but I made well over 51 on the other 9 contracts. So these are just 100 free shares of Riot. But it looks funny in my trading account. Wayne says his covered short put expires today is $41. 41 cents times 100, $41. You see, the thing is with Riot is they're becoming a bit of a meme stock. So the numbers will stop making sense. Anyway, all right, let's start managing positions. Let's take a look at what we got here. When you manage positions, I like to short by days to expiration. My Hillians are expiring. I get to keep my $77 there, my $26 there. My 850 put should be out of the money. Oh, that's expiring 28 days from now. Never mind. All right, INO, $10 call. That's expiring. I can close this one early. Always close them early if you can, even if it's just, most of the time you can close them for a penny or two. Yeah, you lose $2, but you know what? You avoid a whole bunch of bad stuff if anything changes in the aftermarket. After 4:30, you can't put in options trade, but that share price can still change and still catch you. You do not want to hold. You always want to pay the $1 or $2 that it costs to close early. Close early. All right, what other 0 days do we got? We got a $10 call expiring today. I could just be rolling these forward, but this is the other great thing about Tastyworks. It makes rolling so much easier. You can pop right in. I don't think we're going to get filled on 71 cents. You know what? I'll try. Tilray. Ah, you betrayed me, Tilray. I still got 14 days left on Tilray, but I'll probably get assigned on that. TRWG. You're trending down as well. We might get assigned on that. Space, I have a $26 put, expiring in 21 days. I collected $1.34. You're now going negative for me. I'll just have to eat that one and roll it forward. Either roll the puts or roll the calls. Via, you're going okay for me. That's good. Alien, you're going my way, so that's good. Kodak, wish I never opened you. I never owned these Kodak shares. I tried to do something funny with Kodak and it came back to bite me. That happens sometimes. Vuzi keeps going down. AI. Going down, but you know, I'm saying going down, and you're probably listening like, oh man, maybe the strategy isn't the right strategy. Stocks go up and down like kids on a trampoline, and we keep collecting premium month after month, and it all works out fine. ARCG is turning out good. I mean, they're going down a little bit, but still way, way away from my puts, and my puts have come down probably from IV Crush. So that is good. And then these riot shares, just going to hold those. All right. So that's how long it takes to manage your position. It takes about 15 minutes. Now we have, how many positions do I got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So you're looking at a couple minutes per position, 1 or 2 minutes for each one, unless you want to go back and do real research, and you do that to see if you change your mind on the company. All right, let's see what we can do. I need to sell, figure out where I've got some shares. Sell covered calls on. All right, Killian. Where's my cost basis on Hillian? Sold the $30 put, $4.46. And then I started selling calls at 25. Sold puts at 25. I got $3 in credit there. I got another $1 in credit there. See, this is what happens. This is a good history for you guys. 4.46. This isn't going to be totally accurate. I'd have to go through the trade receipts to know when I close these early and whatnot. But we sold a bunch of puts on these. Got the 4.46, 75 cents, $3.10, 2.27 cents. 0.75 cents, 0.91 cents, 0.79 cents, or 179. Now we're at 9 something. 74, 0.23, 0.39. So we've got about $12 plus or minus from when I was rolling, how much I had to buy them back for, but mostly it should be credits. So it should be your total credits, including the closing. So we've got about $12 in credits built up on Hillian, and they're trading at $9 a share. So I bet if I went back and did my full research on these Hillian shares, they'd be free. Free money. We like free money. Let's just do that again real quick. 4.46.75 plus 3.1 plus 2.27 plus 0.75 plus 0.9 plus 1.79. Entering that one wrong. 1.79. 4 plus 2.3 plus 3.9. If the math is right, I'm not saying it is, I have $15.39 on Hillian shares, which got assigned to me at the $25 mark. Now trading at trading at $9. So we've almost broken even. We've almost got these shares for free. I own these shares for about $1. If you guys follow the math on that. And if my math is right. I'm not saying it's right. But if it is right, we own these $9 stocks for $1 because of so many times of rolling forward. Just selling premium month after month after month. I would love to get 93 cents. Now, don't be greedy. I'd love to get 93 cents on these 4 orders at $8.50. Wow. Totally got it. That's crazy. I don't know if you guys see that. Right, at the money at 9, was trading at 0.54. I just got filled $8.50 near the money for 93 cents credit, and now it just dropped down to 74.79 because this crazy spread at 8.5, and at the money is 54 cents 77. Did you guys see that? You guys saw I just got an extra $40 per contract farther out of the money than doing it at the money. Give me an LOL if you saw that in the live chat. Because you don't see that every day. But that's awesome. So, now that I've just collected another 93 cents on my Hillian, I can safely say that I am owning these shares for free. Oh, you know what? I'm silly. Guys, I'm silly. 9:54 at night. I just sold in the money shares, not out of the money shares, because it's the call side on the left. That's why that happens, because Bud is silly, and he's tired, trading in Bali at 10 o'clock at night. Went to Sunset with my friends, had dinner, they ordered dessert. I almost was late for you guys. Alright, but we'll still be fine. Actually, I can probably close those back early again. Well, might be hard now. If I can do that, I can squeak out $9 extra. And I want to get, I want to have, I don't know if I want to own these shares or not. Nah, I'm going to let them get taken away if they get taken away. Basically, I sold the $8.50 for 93 cents, which means that my cap appreciation is going to be, what is that? $9.40. So if it goes up 40 cents, I'll get capped at max profit, and then they'll get taken away. But I'm now completely free on these shares. So whatever they get taken away at, that's the total amount of money of profit I'll get on those shares, and I can get out of them. So I'm not really that ultra bullish on Hillian. But I was tired and reading the chart wrong. I should have been looking, I should have been looking on this side of in the money, not this side of in the money. Because over here, this includes intrinsic and extrinsic value. Over here, it's just the extrinsic value. That's why it's cheaper out here. Alrighty guys, we got 4 more minutes. Let me know if anybody needs a Discord chat invite. You guys are lucky. It's 9 o'clock in the morning for you guys. You guys are bright, fresh, and early. Sorry, it's almost 10 o'clock in the morning. For me, it's about 10 o'clock at night. I start getting tired. Another good reason why I put my trades in ahead of the market, so you don't do silly things like that. Doing an in-the-money trade when you're thinking it's out of the money because you're tired. All right, any more shares that I need to take care of? Already rolled that one, so we're fine. Or did I roll it? No, it was working. I was trying to buy to close that one. Anyway. All right, guys, it's 9:57. Got 3 minutes left. I don't have much else to teach you guys, at least not tonight. Just want to remind you, I can answer that question now. We don't have to answer that one another time. All right. I want to remind you, we do have a tip jar. If this videos are helpful to you, if you make money, think about giving back. You know, you tip your realtor 5%, 3%. You tip your waiter 20%. Figure out what you're going to make in a month. Go ahead and tip me somewhere between 5 and 20%. And we'll call it even. And then Rashid asked for another session. Could you advise if you keep a trade journal and if you do any back testing? I'll be brutally honest, I do not do back testing. Probably could and should. It's not something that I've learned how to do. I am taking courses on hedge fund management and prop trading and getting all that good stuff down. Back testing has not, interestingly, been one of that. I'm not a big super believer in back testing. I mean, it's good, but it doesn't test emotions. And then if you back test 2020, you know, that you get COVID, and that's going to mess up the back testing. Like those are swan events. Anyway, they're interesting. So I'm not a super big believer in back testing. And if you keep a trade journal, I did keep a trade journal, and then I got lazy, and then I didn't keep it, and now I wish I kept it, and so I'm going to get back into that. And you are a good memory. You are a good reminder for that. You should keep a trade journal, and what should be in your trade journal is not only what you opened and sold, but why and how you were feeling that day. Were you tired? Were you sick? My biggest trading mistakes this year happened to me when I think I had COVID. It could be the flu, but that would be the weirdest flu ever. Pretty sure I had COVID in February, and I made bad trading mistakes that week. And then I undid the trade, which turned out to be even worse. So it was sort of the right trade, but it was the right time, the wrong time, and the wrong thinking. I couldn't have much conviction on that. So be careful when you're trading. If you're sick, if you're tired, like I was just tired just now, made a slight mistake. It's still a profitable, I mean, it's still be okay mistake, this mistake, small mistake. But be very careful. So in your trade journal, you want to write down, how are you feeling that day? And then figure out maybe why you were feeling that way, and then you can really go through it. You know, figure out, you know, did you drink a Red Bull and you traded great? Did you drink a Red Bull and traded bad? Maybe don't drink Red Bulls when you trade, you know? So you write down anything that might be useful, and you're just trying to keep it. Wayne Bicknell says you might get 300 shares of NGA today. I assume that's assignment. I hope that works. I hope you're okay with that. Wayne, always happy to know what you're trading, Wayne. I like seeing your trades. And by the way, this picture was from tonight. This was we had a nice sunset on the beach in Bali here tonight. Sorry if you guys can't be out to see it. But it was a beautiful sunset. And unlike many of the sunsets we've had for the last 3 months for rainy season, we've had these thick cloud bands on the horizon. So you can't even see the sun go over. You can't see the sun. It honestly feels like mountains. The sun will set like 30 minutes extra. And then you don't get as beautiful a sunset. Tonight we actually got a really nice sunset. I didn't have my camera up. I watched it while walking on the beach. And then I came back to my chair and took a picture of the aftermath. and they were doing a ceremony. That's why you see all the people in white shirts. What took me to Bali, Wayne asked? It was a plane. It was actually 3 planes. Got on different airports now. I wanted to live overseas. I lived in Vietnam when I was working at a game design studio, game development studio. I was a designer. Living overseas is very cheap. Can be very cheap, depends where you go, but it can be very, very cheap. I live in a nice villa, which is really just a house with a pool. I live in a nice big 2-bedroom house with a car garage and a pool and a nice kitchen and all that other good stuff. I have a cleaner who comes 3 times a week. I have a chef that comes on Sundays. I mostly eat out most of the other times. I cook a little bit now because I'm eating salads and trying to get healthy. But other than that, I don't cook too much. I definitely don't do my own dishes. I got a pool cleaner. I got everything that you would want. And you know what? I spend less than what I used to spend in rent in the U.S. You know, I can get all those things. I can get the rent, the pool cleaner, the electricity, the chef, and the maid, and probably spend less than $1,000 a month. And that's including my electricity. Right? And so if you think about that while you're trading, because I used to spend $200-300 a month just on electricity, plus $700,000 a month for the rent. I usually didn't go over $700 a month. That was sort of my typical budget. In San Francisco, that got me a closet. Literally, I mean, it was the size of a closet. It was very, very small, but I was trying to get game development work out there at the time. Yeah, Rashid, I must say I have a really nice setup over here. And then all that extra money, I plow it back into trading, right? Because if you figure if I had a cost of living that was 3 times higher, you know, I'd have to be taking out 3 times as much or not putting in 3 times as less, or however you want to figure out the math on that. So living overseas while trading has huge, huge advantages. And it's one of the things I want to teach people is that once you get good at trading, especially like the wheel and stuff like that, you can live overseas if you want to. So eventually I'm going to try and get a book and a website that talks about that and let people, I want to hopefully inspire people to move overseas and take that big leap of life and live cheaper yet better and roll more money into their investment accounts and grow their investment and retire early if they want to. And that's the dream for a lot of people, and it's surprisingly easier than you think it is. You'd be surprised about, if you know what to do step by step, how easy, like looking back, I actually could have done this in my 20s. It only would have been harder there. Hey, Rashid, it would have been harder in my 20s just because of the internet and flights and stuff like that. It's definitely easier now because of all the apps we have on our phones and smartphones. But you know, you could have done this. I could have done this in my 20s. Yeah. All right, guys. It is 5 minutes over. I appreciate the time that you've spent with me. We'll talk about more about life in Bali next time. I'm going to be changing the format a bit. I think for people who don't know what the wheel is, I think they can go back and watch some of these segments and they can get a good view for it. So I might focus on more like tips and tricks for the wheel. I'll have to think about it this weekend. But again, if you enjoyed this, please do consider tipping. We do appreciate it. It makes it much more, feels good. It feels good and it makes me feel like it's a good use of my time to help you guys. Signing out. Have a wonderful morning. I hope your trades go great. I'll see you after the weekend.